Hi guys, welcome to today's video, which as you can see there is going to be based on the 7 deadly sins of technical analysis. It's something that I'm asked about constantly. What are the habits, the behaviours that we need to be adopting in order to be able to successfully use technical analysis to aid our decision making? Now, before I get into this, as always, most of you have read this many times now, but please do pause the video, make sure you're comfortable with that. There's not any investment advice or anything like that. Maybe to give myself a little bit of credibility to maybe justify why I'm able to talk about technical analysis. I'm registered with the CMT Association, working my way towards my chartered status at the moment, and technical analysis is something that I'm widely known for across the world now. If you do get some value from this, please do subscribe to our channel, bottom right hand corner, and you'll be notified whenever we upload any new videos. So first up now, the 7 deadly sins of technical analysis is an area that can get, I suppose, a little bit complex. I don't like to get lost in the complexity of it, but essentially what lust is with technical analysis is chasing after stocks. Now, I've got a couple of examples here. Now, when we have lust, and lust is something that I think a lot of beginners, newbies, struggle with, is chasing after stocks when they've already made the bulk of their move. How many of you out there will be buying into Tesla at its highs? We always need to look to see where a stock has come from. When we have a stock that has made a $600-700 move in the space of a couple of months, you don't want to be buying in at $800-900 there, because we can anticipate, especially when we have the relative strength index as being 85, 90, 95 in some occasions, we can anticipate these drops. So jumping on the back of these types of trades is very dangerous, and it's why lust is something that we all need to be conscious of. Again, Virgin Galactic, very recent example. Lots of Robinhood traders, beginner traders are likely to jump on the back of these trades. The word will get out into the news that these stocks are making everybody lots of money. They're momentum stocks. But in reality, we always need to understand where a stock has come from. And when a stock has made a 500-600% move, you need to sit back. You need to let that one go and just wait for the next opportunity, because the one thing the stock market is not short of is opportunity. And I think once you understand that, and once you understand that there's always the next one, things will become much easier. The next up on our list is gluttony. Now, we all know the gluttons of this world, the guys out there that are carrying way too much risk into every single trade that they make. Now, what gluttony looks like is, you might initiate a position, allocate a little bit of risk to a stock, but when you've allocated that risk, you might be risking 10% of your portfolio in that trade. And what that looks like with technical analysis, and I've got an example here of Amazon, and please understand that this is just an example, just for illustration purposes. So what the glutton will do is they will identify a stock that they want to buy, but then they've got this really tight margin for error. There's not any flexibility there. And what they'll be doing with this position is they'll be allocating maybe 20% of their overall capital to that one trade. And they'll be doing it in such a way where the margin for error is very small, with a really tight stop loss. And if that stop loss is hit, a lot of the time, that stop loss is representing 5-10% of overall capital. So you need to get into the habit within technical analysis of identifying where the danger points are on the chart, allocating the correct amount of risk, and having a well executed, well placed stop loss that will represent only a small amount of your overall capital at risk if the trade doesn't go in your favour. And I think the one thing that most of us already understand is that we can never be 100% correct 100% of the time. The stock market just does not work like that, unfortunately. But the one thing that you can control, and it is probably, in fact, it is absolutely the most important thing, is proper risk management. If you don't have your risk in place, you're as good as dead. There's a good old saying on Wall Street that bulls make money, bears make money, but pigs get slaughtered. And you don't want to be the pig. You want to be the trader, the investor that has clearly defined risk reward parameters. You need to have the plan for the trade, the execution, and you need to understand how to manage a position once you're in it. You don't want to be slaughtered by Wall Street, and I see this time and time again. Next up on our list, we've got greed. Now, what greed will generally look like, and again, this is an example here of Wynn Resorts. And now, obviously, we all have the hindsight indicator. The one thing I want to kind of get across here with this one is hindsight can make us look like the greatest trader in the world. I think one of the reasons why my work is obviously really well received is every single weekend I post out an analysis video of the market which demonstrates and shows what you can expect to see over the forthcoming week. I'm not one of these guys that puts on a chart and says this is what you should have done, because trading doesn't work like that, and this is something that I'm very much aware of. We can probably look to see how Wynn Resorts does over time. This is what my thesis looks like at the moment. This is the 11th of March 2020. But what I want to highlight with greed here is that what greed looks like is, let's say for example you've got an entry, you decide that you're taking a range bound entry, you're getting in at the bottom of the range, you've got your well placed target in place. But what oftentimes happens is you get greedy and you deviate from your plan for the trade. And that's incredibly dangerous, because as soon as you start to move on towards your original target, temptation says, well, do you know what if we just break through this level? Can we take this a little bit further? And what inevitably happens is we then get things, a gap down. Then you'll say to yourself, well, gaps oftentimes get filled, so let's just hold on and hold on. And eventually you'll get stopped out around here. You'll chuck in the towel and you'll say, lesson learned. But what you need to get into the habit of is just respecting your plan for the trade. I understand that emotions are part of the game, especially when we talk about your capital, the stock market. It can be very, very stressful. I'd never say to anybody that I don't suffer from the same traits as all you guys. I mean, I'm susceptible to things like confirmation bias, and I always have to battle with, what if? Can I just hold on here? But I think once you understand that, once you have the plan in place, just respect the plan that you had originally for the trade, and that should hopefully help to eliminate greed from the equation. We can always buy back in again, so never feel like an opportunity is lost. Next up on our list is the sloth. Now, we all know the sloths of the world. The sloths are the guys, the girls that are looking for the quick fixes, the lazy among us. And what a sloth is generally looking for are day trading signals, forex signals. They want guaranteed profits. They're seduced by words like financial freedom, make $500 a day, get rich quick schemes. The sloths of this world very, very rarely get it right. The only thing that you can control is your knowledge and your education. And I think once you understand that laziness is generally not rewarded by the stock market, there's nothing wrong with giving your capital to a financial professional and allowing them to take care of it if the stock market isn't something that you want to educate yourself on. I know hundreds of very, very successful financial advisors, hedge fund managers, portfolio managers, and these guys will look after you. But do not give your capital to individuals that are promoting themselves as get rich quick schemes, $500 a day. It will not work out. So, the thing that you have to understand is that it's no longer an excuse to not educate yourself. If you're somebody out there that does want to be able to do this stuff for yourself, there is so much free content available on the internet now. There's an abundance of information. Yes, it's a lot to filter through, I totally understand, but being passive, being lazy with it, sitting on the couch and just expecting money to come towards you, it never works out. So yeah, don't be the sloth. Next up on our list is wrath. Now, this is something that I think everybody suffers from, and what wrath essentially comes down to is the revenge side of things, the revenge trading. I suppose the total flaw that we all have as human beings, behaviorally wise, what we will tend to do is we want to win our money back. We're constantly just saying to ourselves, I've got the correct stock here. I might believe in the CEO. I have a very sound fundamental knowledge of the company. The balance sheet's incredible. I've heard it all. But what wrath looks like, and stubbornness as well, is you might be buying in up here on American Airlines. The trade starts going against you, then you double down, then you go again and you take another revenge trade, and all this time you're accumulating losses. And I understand the other flip side of the equation where you've got the whole dollar cost averaging crew, and I understand that it has a place in investing circles. I'm not going to bash investing. I've got huge respect for investing. But if you're somebody out there that is using technical analysis to facilitate decision making, you need to be conscious of when you're starting to do this. And generally speaking, when a trade starts to go against you, if you start to think about adding to a losing position you've already lost, you need to have a very clear structure. There always needs to be a point between where price currently is and zero, where you're saying to yourself, I'm out. And as soon as you start to kind of get into the revenge trading side of things and trying to claw your money back from Wall Street, you will absolutely lose. And I've seen it again so many times. It's not Wall Street that's the problem, because what a lot of, I suppose, individuals that are susceptible to this character trait, they start to blame other people. They start to blame the stock market because the stock market is acting irrationally. You might start to blame the Fed or maybe Trump, whatever the chosen excuse is. But what is actually the problem is your understanding of your own flaws. And I think when you can get to the root of that problem and start to recognize it as early as possible, then again, you'll start to see a little bit of improvement across many areas of your investing and analysis skill set. Next up on our list, we've got envy. We've all got this, I think, and what I'm about to share with you in a second is a screenshot of one of our subscribers who last year made an incredible trade, and when the individual posted this, it set off a chain reaction and I was able to observe envy. Now, the trade in question here is this one. Facebook, June calls, long, lots and lots. Obviously, this is not an individual with a minimal capital amount. Totally get it. But when you look at those types of returns on a trade, you immediately think, well, I seen this coming as well. Why didn't I take that trade? When you start to get into that circle of envy and you maybe start to think, what if, why should I have done that? You're already losing because you're taking your focus away from what you should be doing, which is managing your existing positions, identifying new opportunities, and just realizing that one has already left the building. So, don't be seduced. Many of you social media followers, YouTube followers, Instagram followers, the guys out there that are posting pictures of their Forex signals and their Ferraris, it's all bullshit. And I think that's something that, again, once you understand that the market, again, doesn't reward those that are lazy, don't be envious of the individuals that are posting these lavish lifestyles, because the reality is it's not trading that's providing the income for that. What is actually providing the income is the newbies, the beginners, the suckers that are buying into these signal services, etc. And it's, again, the market doesn't work like that. If you're envious of those individuals, you should maybe just take a step back and say to yourself, well, what could I be doing differently? And I think as soon as you understand that it's actually about building your own trading plan, building your own analysis, your own structure, that's where you'll start to see the success. It's not about following others blindly. It's not about being seduced by these individuals that don't have your best intentions at heart. I think, again, that's where a lot of behavioural issues start to come into play, and you absolutely don't want to be part of that. Last up on our list, we've got pride. And I think once you have the inherent understanding that you know nothing, that is where you will start to find that you will apply yourself to the markets. You'll understand that you're on a never-ending journey. And that's the one thing that I understand. For as much experience as I have with technical analysis, I am constantly learning. At time of recording, this is March 2020, and the market is under enormous stress at the moment because of the economic impact of a virus. And this is something that, on a technical level, I find absolutely fascinating. And this is something that I think is probably going to be the biggest learning curve for me over the last 10 years. And because I have this understanding that I know nothing, everything just starts to fall into place, and you'll start to seek out those more knowledgeable. You'll start to understand what's actually going on. As soon as you start to fall into the trap of thinking that you know everything, again, you're on the verge of losing. And again, that's not a place that you want to be. And again, if we take into consideration, the example here of American Airlines, again, you don't want to be one of these individuals that think, that you think you know everything, because the market has a nasty habit of humbling absolutely everybody. So yeah, those are the 7 deadly sins of trading, everyone. Technical analysis. If you've enjoyed this, feel free to go and check out our website at honeystocks.com. And if you have any questions, thoughts or comments, please do comment below. Give it a thumbs up. It all helps with the YouTube algorithms. And if you do want to check out an example of our work, I'm going to add in another video so you can get an example of what we do at honeystocks.com as well. So thank you very, very much for watching, and maybe we'll speak to you soon. Thank you very much.